Okay, this is now chapter 4. Our first objective is explain how changes in activity affect the contribution margin and the net operating income. These are the basics of cost volume profit analysis. The contribution income statement is helpful to managers in judging the impact on profits of changes in selling price, cost, or volume. The emphasis is on cost behavior. Okay, so just like in the previous chapter, we talk about fixed costs, we talk about variable costs. And then we introduce also this contribution format income statement, if you remember it. And in the exercises that were answered by group 1, we saw this also. Okay, so this is the contribution income statement of Racing Bicycle Company for the month of June. The year is not stated. So it says here that 500 bicycles, the total selling price is 250,000. So would you know how much is the selling price per unit? That's 250,000 divided by 500. Would that be $500? Less the variable expenses. Would you know also the variable costs per unit? That will be 150,000 divided by 500 units. And then 250 minus 150, you get 100,000. Less the fixed expenses, then you have the net operating income. What is the contribution margin? The contribution margin is the amount remaining from sales revenue after variable expenses have been deducted. Now it says here also that the CM is used first to cover the fixed expenses, and then any remaining CM contributes to net operating income. Okay, so we say that the contribution margin recovers your fixed expense. Okay, after recovering your fixed expense, the excess would be your net operating income. That's why if your contribution margin is less than your fixed expenses, you would have a negative number here. All right? So this is very elementary, but bear with me. There are non-accountants. The contribution approach, no? You have here the sales, the variable expenses, and contribution margin can also be expressed on a per unit basis. So kaming mga accountants, ang tawag namin dito yung CMU column, no? So like here, if you have 250,000, all right, divided by 500 bicycles, then you have 500. Do the same thing for variable expenses, you have 300. So 500 minus 300, you have the CMU, or the contribution margin per unit. You will find out later, no, na meron din tayong tinatawag na CMR, yung contribution margin ratio. Okay, so how do you compute for the CMR, or the contribution margin ratio? If your sales is 100% and variable expenses is 300 divided by 500, would that be 60%? Then 100 minus 60, that will be 40%. Or 200 divided by 500, that will be 40%. And that would be your CMR, or the contribution margin ratio. Each month, RBC must generate at least 80,000 in contribution margin in order to break even. So we are introducing here the term break even. When your contribution margin is equivalent to your fixed expense, let us say this is 100,000, your fixed expense is 100,000, then the number here is 0. At 0, that is your break even. Then there is your break-even point. So sinasabi niya, at this level of sales, okay, you break even if the number here is 0. You are at your break-even point when there is no, when the number here is 0, no excess. No? Wala kang 1, wala kang 2, wala kang 3, or wala ka ring negative number. It's simply 0, and you break even. There is no net profit, there is no net loss. All right. This is an example, no, of a break-even point. Sinasabi niya, at a break-even, at sales of 400, so 400 times the selling price of 500, that would be 200,000. Eh, alam mo naman yung variable expense susunod sa sales, di ba? So 400 times 300, you get 120,000. And 200 minus 120, you have a contribution margin of 80,000. If the fixed expense is 80,000, then there is no net income, there is no net loss. All right? Now, if you increase your sales to 401 bicycles, so nararagdagan siya ngayon, no? Like 401 times 500, this is now 200,500. Si variable expense, susunod siya. So 401 times 300, this is 120,300. If you deduct, you get here 80,200. The fixed expense remains the same, even if there is an increase in the units sold. Therefore, it is still at 80,000. So 80,200 minus 80,000, you get here 200. That's your net operating income. So an increase of 1 unit in your sales quantity, net operating income will increase by 200. And this 200 is equivalent to your contribution margin per unit. Okay, so it says here, we do not need to prepare an income statement to estimate profits at a particular sales volume. Simply multiply the number of units sold above break-even by the CMU. Like for example, if racing sells 430 bikes, its net operating income will be 6,000. Going back, ilan ba yung break-even sales natin kanina? 400. So ano yung excess? 30. And your CMU is 20. Sorry, not 20, it's 200. So 30 times 200, you get 6,000. It is telling us that you don't need to prepare a contribution format income statement. No? So sinasabi lang niya, pwede mo na siyang shortcut. Alright? Next. The CVP relationship in equation form. No? Before I present this, para hindi siya masyadong nakakalito. 500, 300, 200. You see my Excel file?
Yes po, sir.
You have that sales, you have the variable cost, you have the contribution margin. You have your fixed costs. And then you have your net profit or net loss. Okay. Okay, let's put it here. Okay. Magkano yung ano natin kanina? Yung selling price per unit natin. Is it 500? Selling variable cost per unit is 300. Then therefore your per unit contribution margin is 200. Ilang units kanina yan? 500 ba? Or 400? 400. So this is 400. Okay. Now, if this is your information, 400 times 500 is what? That's 200,000 ba? Tignan natin. Ba't hindi natin i-formula? 400 times. Ayan. So it's 200,000. And then variable cost will follow. Diba? Variable cost is 400 times 300. Okay, so the contribution margin total is 200 minus 120,000. That's 80,000. Fixed cost is 80,000. Therefore, your net profit is 80,000 minus 80,000. Did you get this? Okay, this is the contribution format income statement. Okay. Now, in terms of percentage, you get the percentage of these numbers to 500. Like for example, this is 300 divided by 500. Your variable cost ratio percentage is 60%. Okay, and if this is 1, so there are two ways of getting this. 1 minus 0.6, that's 0.40, or simply 200 divided by 500, that will be 40%. Did you get this? Ayan. And you know that at 400 units, sales quantity, you are at your break even because this is 0. When are you at break even? The number here is 0. Okay. Now, the first thing that we will do is we compute for the break even point in units. The formula here is fixed cost, kasi yung slides medyo mas complicated kasi siya, So fixed cost divided by your CMU. That's the formula for the break-even point in units. So you have your fixed cost divided by your CMU. Okay, so you know that the answer here must be 400, right? Because that's the break-even. Okay, let's check if we will get that. So fixed cost is 80,000. Divided by what? The CMU, the contribution margin per unit is 200. So tama ba na ang break-even point in units mo is 400 units? Yes, it's correct because here it says that there are 400 units. So that's the formula that you do, that you follow. What if the question is, what will be the break-even point in dollars or in pesos, So magkano raw ang ibebenta mo? Ito yung sales natin, how many units to sell. Okay. So ito, how much are you going to sell? Okay, so this is the fixed cost divided by your CMR. That's the contribution margin ratio. Okay. Let's see if we will get, dapat ang makuha natin is 200,000, Okay. So fixed cost is 80,000 divided by, what's your CMR? Your CMR is 40%, 40%. So this is 0.40. So 80,000 divided by 0.4. So you get here 200,000. So it's better to do this. Dapat meron kang ganito. Or at least ito man lang. If you are asked of the break-even sales in units, you use this. If you are being asked of the break-even sales in pesos or dollars, you use this. And you have this formula. Fixed cost divided by CMU for units. Fixed cost divided by CMR for pesos. Okay, so I'll go back to my slides. So yung kanina, yung 401 units, this one is, so sinasabi niya, there is the equation form that we can follow. Di ba ito yung contribution format income statement? Profit is equals to sales minus variable expense minus fixed expenses. Do you agree this is the contribution format income statement? Di ba yung sales less variable less fixed, you have the profit. Okay, now it is turned into an equation form. Okay, so your sales, 401 units times 500, that's 200,500. What about your variable? 401 units times 300. Okay, so you get 120,300. Or how much is your fixed expense? Is it 80,000? 80,000. And you get there 200. That's the profit. All right, next. Okay, more details. Sales would be the quantity sold multiplied by the selling price per unit. The variable expense would be the quantity sold multiplied by your variable expense per unit. Okay, so we are clear with the formula. This is the expanded equation form, where sales is represented by P times Q and variable expenses are represented by V times Q. Okay? Ayan. And of course, you have those numbers. Right? So CVP relationships in equation form, it is often useful to express the simple profit equation in terms of the unit contribution margin. Okay, that's the CMU. Diba, selling price per unit less variable cost per unit, you have the CMU. Where it says here, unit CM is the SPU, the selling price per unit, minus the variable cost per unit. Therefore, it's just P minus V, and you have your contribution margin per unit. Minus the fixed expenses, sabi niya. So kanina, no, how do you compute for, kanina di ba meron pa tayong yung expanded equation form. Ngayon, ito na lang siya. Unit CM times Q minus the fixed expense. So this equation can also be used to compute RBC's 200 profit if it sells 401 bikes. Ayan. Okay, let's go to our Excel file. No? O sinasabi daw niya kanina, if this becomes 401, what happens daw if this becomes 401? Tama ba? If this becomes 401, so you get what? A 200 profit. So this is easier, no? Kaysa dun sa equation form kanina. If this becomes 401, mararagdagan lang ng 200. Sinasabi niya na if the per unit CM is 200, you just multiply it by the increase over the break-even point. So 200 times 1. I'll ask you, what if this becomes 402? So magkano yung magiging net profit natin? Now, if this is 402, our net profit will be 400. What if this becomes 403? So this becomes what? 600. Can we proceed? Now we go to learning objective number 2. Now prepare and interpret a cost volume profit graph and a profit graph. Ito yun. The relationships among revenue, cost, profit, and volume can be expressed graphically by preparing a CVP graph. Racing Bicycle developed contribution margin income statements at 0, 200, 400, and 600 units sold. We will use this information to prepare the graph. Okay. Let us say at 0. Do you agree with this? At 0, you don't have sales, you don't have variable expenses, but you have what? Fixed expenses. Okay, at 200 level, you have this sales and variable expenses, and your fixed expenses would be 80,000, and so on and so forth at 400 level and 600 level. You will find out, or you will see that habang tumataas yung sales, tumataas din yung variable expenses. Pero si fixed expense, hindi siya gumagalaw. And we studied this already. Okay, and the graph looks like this. Now, in a CVP graph, the volume is on the x-axis. Sino si x? Ito ba yung x? Ito, no? Yung horizontal. The vertical is this one, the y-axis, no? The dollars. So it says here, draw a parallel line to the volume axis to represent the total fixed expenses. Ito yung 80,000 kanina. Ito, no? So at 0, 80,000 ka. At 100, dito ka pa rin. So all throughout, your fixed expense is constant. All right? Choose some sales volume, say 400 units, and plot the point representing total expenses. Draw a line through the data point back to where the expenses line intersects the dollar axis. Ayan. So ito na yung total expenses. Let's complete it. The green line would be your sales. Ayan. And then that is the break-even point. This is the 400 units or 200,000 in sales. Ito siya. Okay, this is the 400. Here is the profit area. Here is the loss area. All right. Now, let's go to objective 3. Now, use the CM to compute changes in contribution margin and net operating income resulting from changes in sales volume. All right. So the CM ratio is calculated by dividing the total contribution margin by total sales. Ito yung ginawa natin kanina sa Excel file. No, yung 300 divided by 500, that's your VCR, that is 60%. 200 divided by 500, that is your CMR, that is your 40%. Or simply, 100% minus 60%, you get your 40%. So what's your CM ratio? Ayan. So yung ginagawa natin kanina to, no? 200 divided by 500, you have your 40%. The CM ratio can also be calculated by dividing the contribution margin per unit by the selling price per unit. Okay, if Racing Bicycle increases sales by 50,000, the contribution margin will increase by 20,000. Here's the proof. Okay. What is 40% no, of 400? No? Sorry. Sabi natin, the sales will increase by 50,000. That will be how many units? That will be 100 units. So that is increasing from 400 units to 500 units. Oh, this is 200,000. How did you arrive at 250,000? That is 500 times 500. That's 250,000. Or simply, 200,000 times 1.4%, no? That is 250,000. Sorry. Binigay pala niya yung 50,000, no? So that's 200,000 plus 50,000, that's 250,000. Or simply, 500 units times 500 per unit. Less the variable expenses. Susunod ba yung variable expenses? Sabi niya dito, a 50,000 increase in sales revenue results in a 20,000 increase in CM. And that is 50,000 times 40%. That's 20,000. Okay? Next, the fixed expense will be the same. Then the net operating income is 20,000. Yan. Dinidetalye lang niya sa atin, but in Excel format, no, it's lot easier. Okay, so let us do a computation. Let's have the quick check. Coffee Clutch is an espresso stand in a downtown office building. The average selling price of a cup of coffee is 1.49. The average variable expense per cup is 0.36. So would you know magkano yung CMU natin? Is it 1.49 minus 0.36? What's the number? 1.49 minus 0.36. That's 1.13.
1.13.
Would you know ano yung CMR natin? 1.13 divided by 1.49. What's the CMR?
75.34%.
75 something. 75%. So the average fixed expense per month is $1,300. So 2,100 cups are sold each month on average. What is the CMR daw? Di ba sinabi niya, yun na, 0.758 ba? Sinabi niyo. Did you say 76%? 0.75.
Yes, sir.
So everybody, did you get this? 1.49 minus 0.36, that's your CMU, divided by 1.49, then you get 0.758. Let's proceed. Now, the relationship between profit and the CM ratio can be expressed using the following equation. So, balik na naman tayo sa kanina. No? Profit is equals to CM ratio multiplied by sales. Kasi nakukuha mo yung total contribution margin. When you do CM ratio times sales. Minus the fixed expense. So, dapat yata meron siyang parenthesis. No? CM ratio times sales minus the fixed expenses. So if Racing Bicycle increased its sales volume to 500 bikes, now what would management expect profit or net operating income to be? Now if your CMR is 40%, okay, then multiply that by, kasi kung 500 ang additional times 500, that's 250,000. So 40% of 250,000, that's 100,000. Minus 80,000, that would be a profit of 20,000. Okay? Next, show the effects on the contribution margin of changes in variable cost, fixed cost, and selling price, and the volume. Ayan, what happens daw? Ito yung ginagawa natin kanina. No? The variable expense ratio is the ratio of variable expenses to sales. It can be computed by dividing the total variable expenses by the total sales, or in a single product analysis, it can be computed by dividing the variable expenses per unit by the unit selling price. So we are familiar with this already. No? All right. Now, what is the profit impact if Racing Bicycle can increase unit sales from 500 to 540 by increasing the monthly advertising budget by 10,000. Let's go back, no? So assuming the advertising budget is a fixed expense, no? So anong mangyayari daw dito sa fixed expense mo, yung 80,000? So plus 20,000, it becomes what? 100,000. Next. Sabi rin dito, sales will increase by 40. So if that is increase of 40, so that will be, this is 540 multiplied by 500, and then 540 multiplied by 300. And you have the answer. Let's see what happens here. So from 500, you increase your units sold to 540, and you increase your advertising budget by 10,000. 10,000 pala, hindi 20,000. Okay, so this becomes 90,000. Here, what happens? 540 times 500 and 540 times, magkano yung variable rate natin per unit? Is it 300? Ayan.
300.
So you get 162,000. So you should know if anything changes here, pwedeng mag-iba yung quantity, yung selling price, yung variable rate, or yung fixed expense. And you just do this. Okay, Excel is your friend. Okay, here is a shortcut. So pwedeng sabihin lang niya, increase your contribution margin, like in this case. So 40 units times 200, that's 8,000. Minus the increase in fixed expense, then there is a decrease in your operating income by 2,000. Okay, next. Now, what is the profit impact if Racing Bicycle can use higher quality raw materials, thus increasing variable cost per unit by 10 to generate an increase in unit sales from 500 to 580? So, magkano ba kanina yung variable rate natin? Is it 300? 300 yung variable rate. So, now it becomes what? 310.
310.
Pero, no, since maganda na yung quality mo, magdadagdag ang iyong sales, no, from 500 to 580. So, how is that? Here. Ayan. So, your units will increase from 500 to 580. But your variable expense, now the rate is going to increase also. This is now your new variable rate. It's now 310. Multiplied by 580 units, you have your 179,800. There is no change in your fixed expense. So your net operating income is 30,200. Okay, another one. What is the profit impact if RBC cuts its selling price? So from 500, reduce it by 20, it now becomes what? 480. Increases its advertising budget by 15,000. So from 80, it becomes what? 95,000. And the effect is increasing sales from 500 to 650. Ayan. So 3 changes. See what happens. And your net operating income is now 22,000. Let's not discuss this in detail. No, it's easy to understand. All right. Now, what is the profit impact if 1, RBC pays a $15 sales commission per bike sold instead of paying salespersons flat salaries that currently total 6,000 per month? Anong effect nun? Anong account sa income statement natin to? Si 15 sales commission. This is a variable expense, right? This is a variable expense. So you pay, so you increase your variable by 15. Pero matatanggal daw siya doon sa fix mo na 6,000. And then number 2 increases unit sales from 500 to 575 bikes. O doon sa ano natin, doon sa balance scorecard natin. Bakit nangyari yung ganun? Kasi na-motivate si salesperson, di ba? Na-motivate si salesperson to sell more. Kasi kapag fix ang salary niya, whether he sells whatever quantity, the salary is fixed. Pero pag binigyan pala siya ng commission, no, and in the literature, that is supported. If the salary is based on a certain performance level, no, tumataas yung performance ng tao. Like in this case, the sales increased from 500 to 575 bikes. Okay, and the effect is this. So yung variable expense natin, naragdagan siya ng 15 because of the commission. So 315 times 575. Saan nanggaling? Yung ating fixed cost, yung 80,000, tinanggalan siya ng fixed na 6,000. So naging 74,000 na siya. So the effect is increasing the quantity sold from 500 to 575, and then your net operating income increased now from 20,000 to 2,375. Okay, this time, change in regular sales price. If RBC has an opportunity to sell 150 bikes to a wholesaler without disturbing sales to other customers or fixed expenses, what price would it quote to the wholesaler if it wants to increase monthly profits by 3,000? Okay? Just to understand it, you can sell now additional 150. Now, the requirement is to determine the selling price if you want to increase the monthly profits by 3,000. So how do we compute? So 3,000 divided by 150 bikes, okay, the answer is 20 per bike. That is your target profit per bike, 20. But you would have to cover for the variable cost, which is 300. So you will sell at 320 or 20 plus 300. Is that clear? No, you will sell at 20 plus 300. The regular selling price is 500, but there is this offer. No, I'll buy at wholesale 150 bikes. What's your price to me? And you say the price is 320. Okay, so 150 bikes times 320, that's 48,000. The variable cost is 45,000. So this transaction will have a net effect of 3,000 increase in your operating income. Now, in objective number 5, we determine the level of sales needed to attain a target profit. Okay, in the previous slides, we computed for the break-even point, no, sales in units, break-even point, sales in pesos. And then we determined also what's the effect on net profit of any change in selling price, in quantity, in variable rate, or even in the fixed cost, or any combination of those. Now there is a target profit. Okay, so let's go back to our Excel file. Okay, so sinasabi mo ngayon, what if there is a target profit? Okay, palitan lang natin yung formula, no? So compute for your target sales in units. Kanina the formula is this, di ba? Fixed cost over your CMU. O dagdagan lang natin, fixed cost plus the target profit. That's your formula, no? Okay. What if its target sales in pesos? O therefore, this is what? Same lang, palitan ko lang yung denominator into what? Change CMU to what? What happens to this? It becomes what? CM. So those are our formulas. All right, let's check it. Okay. How much will I sell if I target a profit of 50,000? If I target a profit of 50,000, okay? So using same information here, the fixed cost is 80,000. I will target a profit of 50,000. And I will use what? 200, no, to determine how many will I sell. Okay, so this is what? 80,000 plus a target profit of 50,000. What's your CMU ulit? Your CMU is 200. So tama ba? 80,000 plus 50,000 is 130,000. Correct? What's the answer? How many will I sell so that I get what? A target profit of 50,000. So 130,000 divided by 200. So I will need to sell 650 units. Para maka-target profit ako ng 50,000. What's the formula? The formula is this. Fixed cost plus target profit over your CMU. Can we prove that I will earn a target profit of 50,000? Okay, let's make this 650. Let's make this 650. Yeah. So tama ba? If I make this 650, I will get a net profit of 50,000. Okay, kasi susunod si variable, hindi naman gagalaw si fixed cost. So this is 50,000. Okay? Now, how do you answer or how much am I going to sell? Ano yung peso value ng sales? Oh, the answer is 325,000. Now, using the formula, can we get 325,000 by using the formula? Okay, ito. Di ba fixed cost is 80,000 Target profit is 50,000. Okay? And then your fixed cost is, sorry, your CMR is what? Is it 40% your CMR? This one. 40. So divided by 0.40. Okay, so this is now 130,000 divided by 0.40. And the answer is, so 130,000 divided by 0.4, you get here 325,000 pesos. So is this the number that appears here? Yes, 325,000. Is that clear? No? Okay. Let's have another target profit. What if I target, let us say 60,000. So palitan mo lang ito. No? If your target is 60,000, so this is now 1/3. So this is 80,000 plus 60,000. So then 140,000 divided by 200. You will have to sell 700. No? O gamitan natin dito. If this is 60,000, okay, so this is 80,000 plus what? Plus 60,000 divided by 0.40, then you must sell 350,000 pesos. Okay, so let's prove that. Okay, if we sell 700, if this is 700, of course, the net profit is 60,000. Is it clear? Okay, so I'll stop sharing this. The level of sales needed to attain a target profit. Okay, ito yung diniscuss natin sa Excel. Now, let's see how that is presented in the slides. So we can compute the number of units that must be sold to attain the target profit, again, using the equation method, and number 2, the formula method. So this is just a further illustration of what we had. Tama ba to? Profit is equals to unit CM times quantity minus fixed expense. Ito yung unit contribution margin times quantity minus the fixed expense. Now your goal daw is to compute for Q. Diba, when you work on equations, you can compute for a missing variable here for the value of the missing variable. Tama ba yung sinasabi ko? The value of Q, no? Okay. Suppose Racing Bicycle Management wants to know how many bikes must be sold to earn a target profit of 100,000. Doon sa atin, ano lang to fixed cost plus 100,000 divided by what? CMR, tama? Okay. O, sundan natin yung kay book. No, unit CM times Q minus fixed expense. Ayan. So unit CM is 200 times Q minus 80,000. Ano gagawin mo ngayon? Ililipat mo si Q dun sa kabila, di ba? So 200 times Q, ito naman nilipat natin yung 100,000 dito. So nagpalit sila ngayon, no? Okay. So Q is equals to 100,000 plus 80,000 divided by 200, and Q is equals to 900. Okay, so this is now the quantity. Ano yung formula natin dito? Fixed cost plus the target profit divided by the CM and you will arrive at 900. Next, the formula uses the following equation. Target profit, ito na pala plus the fixed expense divided by the CM. This is what we did, no? Similar to our formula kanina doon sa Excel file. Next, suppose Racing Bicycle Company wants to know how many bikes must be sold to earn a profit of 100,000. So ganun din, no, fixed expense plus the target profit of 100,000 divided by the CMU. And of course, you still get 900. Okay. Now, we can also compute the target profit in terms of sales dollars using either the equation method or the formula method. Anong mag-iiba kapag sales in dollars or pesos? The CMU becomes CMR. Ayan. So ito yon, yung CMU kanina becomes the CMR. Our goal is to solve for the unknown sales, which represents the dollar amount of sales that must be sold to attain the target profit. Okay, so same given, you want to earn 100,000. So 40% times sales minus 80,000. So the sales is what? $450,000. It's the same with what we did in the Excel file. We can calculate the dollar sales using the formula method. So target profit plus fixed expense divided by your CMR. And you should get the same answer, which is $450,000. Let's have a quick check. Coffee Clutch is an espresso stand in a downtown office building. The average selling price of a cup of coffee is 1.49. Same given numbers. 0.36 is the variable rate. The fixed expense is 1,300. Okay, you can use any formula, no? Okay. What would have to be sold to attain target profits of 2,500 per month? So ano yung denominator mo dito? Kasi hinahanap quantity eh. Eh di CMU. Ano ba yung CMU natin kanina? 1.49 minus 0.36, you get what? 1.13. O following yung sa Excel file, anong gagawin natin? Fixed cost plus the target profit divided by CMU. Tama ba? 1.3 plus 2.5 divided by 1.13. Yeah. So 2.5 plus 1.3, that's 3,800 divided by 1.13. And you will have to sell 3,363 cups in order to get a net profit of magkano? $2,500. Another quick check. O sabi niya, use the formula method to determine the sales dollars that must be generated to attain target profits of 2,500. Ano gagawin mo kapag dollars or pesos ang hinahanap? Siyempre, papalitan mo lang yung CMU ng CMR. Ano ba yung CMR natin kanina? What's 1.13 divided by 1.49? Yan ba yung 76% kanina?
Yes po.
Okay.
Yes po.
So, ito yun. 2.5 plus 1.3 divided by, ito, yung 76%. 0.758. So, you will get $5,011. So, I hope this is clear. So, let's stop there. Mas madali na to. In fact, we have computed already for the break-even point kanina. So guys,